Yo, what's going on, everybody? It is Tuesday, February 7th. Nice day up in the market. And I'm going to talk about that in a second. I just want to let everybody know, yesterday I put up a very personal video. I don't know how many of you watched it. And then I took it down. I think I took it down this morning because, I was embarrassed and I thought, I shouldn't be putting up stuff like that. I don't have a PR representative or anything like that for, as somebody to advise me on what's appropriate or what's not appropriate. If you know anything about me and if you've been following me for any length of time, what's that saying? I just wear my emotions on my sleeve, right? I don't hide anything. What you see is what you get. All right? I'd probably, and it's my friends joke about it, I'd be a terrible spy. And I should mention that this is also a funny story. Maybe I'll save it for another time, but I did interview at the CIA back in 2000. I was over there. I was at the CIA. I'll tell you that story another time. Anyway, but I would make a terrible spy because I just, I wear my emotions on my sleeve. But I put the video back up about my fuck up, my crazy time in Zurich, because I listened to it again and what the fuck? I don't think it was that terrible. Anyway, that's who I am. What am I gonna hide it? What am I gonna hide it? I'm not gonna hide it, all right? All right, so anyway, today we had a nice day. The market was up. And what I find interesting, and for those of you who have been following me now it's not even a question if you've been following me for a long period of time. I mean, just over the last month, I've been telling you that the monetarists, they're going to start to fucking lose their minds because their entire thesis, their entire outlook is unraveling. And I pointed out some things which actually are comical and they're humorous. They don't have an explanation, so they're just kind of throwing their hands up in the air and saying the market just doesn't want to go down. It's not in the mood. They're giving the market this anthropomorphic quality, trying to equate it to a person or an individual. Because they don't see, and again, this goes back to, basically what I've been saying from day one. If your whole analytical framework it rests on a single variable understanding, and I use that in quotes because the understanding they have is wrong or it's flawed. If all you have is a single variable analytical framework, and that is, the lens by which you see everything, then you're going to be wrong most of the time. At best, you're going to be right half the time, and that's only because you're lucky, not because you're right. All right? I mean, for example, when the Fed started raising rates last year in March, the whole idea was, contraction. And actually, we've seen an acceleration in credit creation since rates have been increased. The other thing that we can talk about is the inverted yield curve. And what's funny is I've actually seen some really, really hard line, believers in the inverted yield curve as the infallible predictor of recession. They're kind of throwing in the towel too, and they're like, okay, that doesn't work. That we got to throw that into the bin of uselessness. And I was never a believer in the inverted yield curve. And banks, they price loans not based on the yield curve. This is also like, because I'll tell you why, because this whole yield curve thing is based on this false belief in loanable funds, that there's some finite amount of loanable funds out there. Okay, and this gets into this whole aspect of like, oh, banks lend out reserves. They don't lend out reserves. They might lend reserves overnight to each other, just, you know, for the purposes of clearing, but they don't lend out reserves, and they can't lend out reserves. And even if they lend out reserves, it's the same amount of reserves in the system. It just goes from bank A to bank B. That doesn't create any money, all right? So you know, there's two things here that, I mean, the spotlight is really on two things here. One is just, you know, the total failure of the monetarist view. That's clear. I mean, they're just like throwing their hands up in the air right now saying it just doesn't feel like going down. Huh? You know, we're right with the, you know, with the fear of the rate hikes and the QT and all that, but it just doesn't feel like it, folks. It doesn't feel like it. You know, that's number one. And number two is kind of, that's the frustrating part, is that unfortunately, and I think I'm going to be proven right, and I think a lot of you will agree with me, that this dogma, this ideology is just going to continue. There's going to be no movement or effort or interest whatsoever to go back and to the drawing board and just try to evaluate, you know, like reassess, like, why is this not working? Why is this not working? Why has it not resulted in the forecast that we were talking about? And this goes up to the highest institutional level. This goes up to the Fed. I mean, the Fed is still talking about like keeping interest rates elevated. Go ahead. I mean, do you not see the irony is that the Fed every single day publishes the interest income transfers. I mean, you know, it's like one line on the DTS the Treasury statement publishes that, but I mean, that's, if you had one guy at the Fed and his job or her job would be solely to just track that, you know, that person be going to their boss, tapping on their shoulder and saying, gee, I don't know, but this looks like it's going up, and it looks like it's going up in a big way. I mean, I just saw a thing today, I don't know, it was like a 30-day or 60-day T-bills, like people are making 5%. Like this is for US dollar savers, this is really nice income. And that income gets spent. Maybe not all of it, but that income gets spent. So anyway, it all flows back into what, you know, and this is why I told you guys. I said, like, we're not going into recession. The economy is going to expand. You know, all this stuff is bullish. All these people who are freaking out and convulsing and having, you know, like meltdowns over monetary, and it's still happening today. I mean, today in the news, the market was up good today, and they're like, they were looking for something from Powell, but there was nothing really said. But so you could see from that statement alone how crazy it is. It's like, please say something to crash it down so that we could feel that our theories and our, you know, analyses are justified. But like, it won't crash down. It won't crash down. And, you know, it'll crash down if we go into some kind of fiscal austerity. And that still might be possible with the debt ceiling hanging out there. But something leads me, and by the way, there was a bunch, oh my God. There was just a bunch of stuff on Twitter today from this Kevin McCarthy. I mean, this is a whole separate video that I gotta make about how he just has everything wrong about the national debt, right? He says the national debt is at 31 trillion. It's an enormous, historic, unprecedented burden to Americans. No, it's a 31 trillion gift. That's 31 trillion that Americans, not just Americans, but globally, the non-government of the United States holds as part of their financial wealth. It's not a burden. You know what a burden would be? Like taking that all away. And I've said this in the past, like that would create a depression of an order we've never seen before. I don't think ever in history. I mean, but the fact that this narrative continues now to this day, I mean, come on, people, seriously, like nobody gets it, like really nobody gets it. The government is not a household. I mean, and he had one thing at least he said, which I thought was good. He said cuts to Social Security and Medicare are not on the table. They're off the table. But we got to cut some other stuff. Okay, you want to cut some other stuff? Here's what. Cut this ridiculous near $1 trillion annual defense budget. Defense against whom? We just fight wars that are unnecessary. Cut that. You'll get plenty of savings. Plenty of savings. That's totally unnecessary. But, of course, that's never going to happen. So, where are we? My ideal scenario, and I don't know if it's going to work out this way, but I told you that February is going to be a big month. All right? I mean, by the way, you look at some stocks like JP Morgan today. Hit a new 52-week high. Back in October of last year, Wall Street analysts were recommending their clients to sell at 105. Stock hit 144 today. They were telling them to sell at 105 because of earnings. My subscribers, on that day, I sent out a freaking email saying buy that stock. Why? I don't even want to go into why. It's just, at this point, it's ridiculous. Man, I'm telling you. And I don't consider myself a genius. I'm a learned person. I did switch from a long time ago when I was of that perspective, that wrong perspective. I mean, I think maybe if I'm going to give myself credit for one thing, it's having an open mind, the ability to change my views. I know a lot of you are like that too. I can see that. I know that. I see that. I see that from the comments that I read here. Man, go back. Watch some of my videos from 2009 or 2010 and see, like, there was maybe, for every one like, there was maybe like 500, thumbs down. Okay? I was saying the same thing I am now. So, I guess that's a source of optimism. Things have improved. Anyway, I was going to say my ideal situation would be this. We get a correction in the March-April period based on the tax strains that are coming up. Of course, quarterly corporate tax payment on March 15th. I've been telling you that February 15th is the peak in the fiscal flows with the quarterly interest payment. Then we have the dreaded April 15th when we got to pay taxes. And I hope there's a there's going to be a correction. And then here's my ideal scenario. I don't know if it's going to happen. I don't have control over this. But if Congress can work out some deal between the House GOP and the president on the debt ceiling where they agree on some kind of symbolic cuts. In other words, spending cuts that are not really spending cuts. They're just like, they look like spending cuts, and both sides agree. And the debt ceiling is resolved. And then I think when you look at the fact that we've had like something like 63 or 65 weeks of negative sentiment in the AAII weekly sentiment survey, I think we could have 2 years straight up in the stock market. Straight up. And I'll retire. All right, folks, that's it for today. And thanks, everybody, for watching. And again, let me remind you, please, because it helps. It helps a lot. And it's a very simple thing I'm asking for. I'm not, you don't have to, I'm not asking for you to sign up for my reporter. Go and please just like and subscribe. All right, let's get this channel boosted. If you like and subscribe, it helps with this freaking Google algorithm, and I would really appreciate it. Bye.